Weekly USD JPY. The central bank earlier this month spooked markets by unexpectedly reducing its procurement of long-term government bonds during a daily market operation, which caused long-term interest rates and the yen to jump. To do this, the bank will continue to buy government bonds at an annual pace of about 80 trillion yen, or about $720 billion. Following the conclusion of the central bank's two-day policy board meeting, the BOJ opted to keep its deposit rate unchanged at -0.1% and the 10-year yield target at around 0%. The outlook for inflation was also kept as it is, although the bank now describes expectations as having been more or less unchanged, a slight uptick from its previous assessment of them remaining. In a weakening phase, the central bank forecast the economy to grow 1.4% in the fiscal year starting in April, with inflation of 1.4% over the same period. BOJ Gov. Haruhiko Kuroda will hold a news conference from 3:30 p.m., where he will likely explain the rationale for the JGB purchase cutback. The 9-member board also kept its price forecasts that project inflation to hit 2% around the fiscal year ending in March 2020, but with inflation still well below 2%, economists said the bank has little option other than to continue with its massive easing measures. Despite an improving economy, the BOJ could have raised its growth forecast, given recent economic data, but it didn't because it's fearful of fueling speculation of policy normalization. Almost three-quarters of Japanese companies expect the economy to keep expanding at least another year, extending an already strong run, although they were not as bullish as market estimates, a Reuters poll showed. BOJ policymakers are hardly complacent and warn that an index of consumer inflation that strips away the effect of fresh food and energy, still at 0.3%, must accelerate more before any debate on withdrawing stimulus could begin. The yen gained strength after the BOJ cut its bond purchases earlier this month. Newsletter has been successfully subscribed.